Welcome to my channel. I'm Doris and I'm here to share with you about my stock account update. Today my account lost $6,197. US stocks closed higher on Friday with the Dow Jones down 2.7% for the week. Today my account made a total loss of $6,197 or 6.92% from a decrease of $5,382 of SQQQ and $815 from DRV. The US stocks on Friday closed higher. The Dow and S&P 500 both fell this week, with Nasdaq recording its third straight weeks of gains. The outlook for US monetary policy and the US earnings remain the focus. Alphabet announced they'll cut 12,000 jobs worldwide. All 11 sectors in S&P 500 closed higher. The Dow Jones is down 2.7% for the week, while the S&P 500 is down 0.66%, and Nasdaq rose 0.55%, its third straight weeks of gains. KKM financial founder Jeff Koberg said, "Our responses are more emotional than expected. Many people have become so pessimistic that we see a parabolic market at the beginning of the year. Now, as expected, the market is not moving in a straight line. We are looking for a new way to continue moving and have a higher lows. The higher lows give the bulls a little confidence. However, technical side still supports short and higher shipments. The market is extremely focused on the Fed's retrospective analysis of the market and some forward-looking and leading metrics, but it is not how to respond. Among these forward-looking and leading indicators, including economic data, such as retail sales and industrial production, he said, these are the places where the market began to collapse. Corporate earnings are still the focus of the market. Investors worry that the fourth quarter result would mark the start of a decline in U.S. stocks' corporate earnings. Netflix reported beating expectations for paying users, but its quarterly earnings missed analyst expectations. The 2023 Fed Voting Committee and Philadelphia Fed President James Harker on Friday reiterated his support for the FOMC's 25 basis point future rate hike. Former U.S. Treasury Secretary Sam Summers warned that the annual meeting of the World Economic Forum that easing measures against inflation would plunge the economy back into the recessions of the 1970s and have a negative impact on workers everywhere. Most economists polled by the media believe that the Fed will add 25 basis points to its next two policy meetings before ending its tightening cycle, before keeping interest rates on hold for at least the rest of the year. Most economists expect the interest rate to peak at 4.75% to 5% in March. That is in line with the interest rate further future pricing, but 25 basis points below the median 2023 interest rate forecast by Fed policymakers at the end of their December meeting. Among overseas central banks, European Central Bank President Christine Lagarde told the World Economic Forum in Davos that markets should abandon the idea that ECB would soon reduce the rate of interest rates. She reiterated that he would continue to raise interest rates to restore inflation to the central bank's target. Markets are also looking on the debt ceiling, and the Treasury is tapping into pension funds to avoid default. The federal debt ceiling on Thursday, the U.S. Treasury Department is now starting to use special measures to avoid a U.S. default. The department is changing investments into 2-year government-managed retire funds, a move that allows the Treasury to continue federal payments unable to raise overall debt levels. Ms. Yellen reiterated that unconventional measures were of considerable uncertainty and urged Congress to act quickly to raise the debt limit. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.